Cardano's founder forecasts Bitcoin at 250K. What to expect? Cardano's founder, Charles Hoskinson, just made a prediction that's turning heads. A $250,000 price target for Bitcoin. He says it's not a question of if, but when, and he's eyeing mid-2026. This isn't just another wild guess pulled from thin air. Hoskinson is betting on 3 catalysts that he believes the mainstream is completely missing, starting with 2 key pieces of legislation that could finally unlock cryptocurrency's potential in the United States. So, is he onto something? Is a surge of over 100% from today's prices really possible? And more importantly, what could this mean for your money? We're gonna break down Hoskinson's prediction, dissect his 3 key reasons, and give you our take on what to expect. This is the kind of analysis you won't find anywhere else. Let's get into it. First, let's set the stage. Charles Hoskinson, one of Ethereum's original co-founders and the creator of its rival, Cardano, recently laid out a clear forecast at the Token 2049 conference. He stated that Bitcoin is likely to hit $250,000 sometime in mid-2026. This isn't just a big number, it's a big deal because of who's saying it. Hoskinson is a builder and a mathematician, often seen as a more measured voice in a field known for hype. When he gives a specific prediction, people listen. He's not basing this on simple market cycles or wishful thinking. His argument is built on a foundation of coming regulatory changes, accelerating institutional money, and explosive user growth. He sees the recent market dips as nothing more than a quick pit stop at the gas station before the long road trip. And when you look at the broader market, it's hard to ignore the building momentum, with Bitcoin currently hovering around $120,000 and the total crypto market cap sitting between $3.7 and $3.8 trillion, the engine is already revving. Hoskinson believes he knows exactly what's about to light the fuse. Now for the first and arguably most important reason behind this massive prediction: a revolution in regulatory clarity. For years, the biggest weight holding crypto back in the US has been uncertainty. The turf war between regulators like the SEC and the CFTC has kept trillions in institutional money on the sidelines. Hoskinson argues this is about to change, pointing to 2 specific pieces of legislation. The first is the Genius Stablecoin Act, which was signed into law in July 2025. Think of this as the official rulebook for stablecoins. It requires issuers to maintain 100% liquid reserves, mandates transparency, and sets clear guidelines for how these digital dollars can operate in the US. This domesticates the industry, making stablecoins a trusted part of the financial system. The other bill is the real game changer, the Digital Asset Market Structure Act, better known as the Clarity Act. For years, the burning question has been, is a token a security or a commodity? This is the exact clarity that large institutions have been begging for. The Clarity Act, which has passed the House and now awaits a Senate decision, aims to finally draw clear lines, giving the CFTC oversight of digital commodities. Hoskinson believes if this bill becomes law, it won't just be a green light, but the starting gun for what he calls a Giga Chad bull run. It would remove the legal risk that has kept pension funds, endowments, and major corporations from diving in head first. Regulatory clarity might be the trigger, but it's only half the story. The second pillar of Hoskinson's $250,000 thesis is that the institutional herd is already moving. New regulations will just turn their slow march into an all-out stampede. You don't have to look far for proof. The spot Bitcoin ETFs approved in 2024 were a watershed moment, giving Wall Street a regulated bridge into the crypto market. The results have been stunning. BlackRock's iShares Bitcoin Trust, IBIT, became a runaway success, recently crossing the incredible $100 billion mark in assets under management. That's not just spare change, that's the world's largest asset manager bringing its clients into Bitcoin. This signals a profound shift in how big money views Bitcoin. It's moving from a speculative bet to a strategic portfolio allocation. We're seeing this with pioneers like Strategy Inc., formerly MicroStrategy, which continues to stack Bitcoin as a primary treasury reserve asset, and now holds over 640,000 BTC. Hoskinson sees this as proof that the institutional dam is breaking. The demand is there, and it's growing. A recent survey from Coinbase and EY found that 83% of institutional investors plan to increase their crypto allocations in 2025. They seem to be just waiting for the final regulatory signal to go all in. So, We have regulators preparing the field and institutions lining up at the gate. The third and final piece of Hoskinson's puzzle is mass distribution, bringing crypto to everyday people through the platforms they already use. First, let's talk user growth. Hoskinson and other analysts predict an exponential leap is coming, with an influx of anywhere from 500 million to a full billion new users entering the ecosystem. But where will they come from? This is where it gets really interesting. Hoskinson points to the potential integration of crypto by the Magnificent Seven, tech titans like Apple, Microsoft and Amazon. These companies are no longer just watching from the sidelines, they're exploring how to weave stablecoins and blockchain into their core services for global payments, creator economies, and more. Think about what that means. Imagine millions of people making transactions with a stablecoin through an Apple device without ever touching a crypto exchange. This would make crypto invisible and frictionless, driving adoption on a scale the industry has only ever dreamed of. This kind of mainstream integration would create a constant, underlying demand for the entire digital asset ecosystem, with Bitcoin serving as the ultimate reserve asset for this new financial layer. Okay, those are Hoskinson's 3 pillars for a $250,000 Bitcoin: a regulatory revolution, an institutional stampede, and a mainstream user takeover. It's a powerful story, but does it hold water? A $250,000 price target by mid-2026 is, without a doubt, ambitious. It requires a massive acceleration of the current momentum. There are definitely risks. The Clarity Act could get stuck in legislative limbo or be watered down. A major global recession could dampen institutional appetite for risk. We can't ignore those possibilities. However, the core of Hoskinson's logic is sound. The single greatest bottleneck for this industry has always been regulatory uncertainty in the world's largest economy. If the US government provides a clear framework with the Clarity Act, it's hard to argue the idea of a massive inflow of institutional capital. The demand is proven, the ETF infrastructure is built, and the capital is waiting. This legislation could be the missing key. If you're finding this breakdown valuable, do me a favor and hit that like button. It takes a second, but it makes a huge difference for the channel. So, let's bring this back to you. What could happen if this prediction starts to unfold? If Bitcoin makes a run for $250,000, it won't happen in a vacuum. A rising tide lifts all boats, and in crypto, Bitcoin is the tide. A move that big would almost certainly kick off a historic altcoin season. As Bitcoin's price soars, profits will eventually rotate into other projects. This would mean a huge injection of capital into the broader market, potentially leading to major gains in other ecosystems. Projects with strong fundamentals and clear utility, including Hoskinson's own Cardano, as well as Ethereum, Solana, and others, would likely benefit as capital flows downstream to find the next wave of growth. This could create a cycle that propels the entire digital asset market to heights we haven't seen before. Charles Hoskinson's $250,000 Bitcoin prediction isn't just a random number, it's a roadmap based on 3 powerful forces converging. First, the potential for regulatory clarity from landmark legislation like the Genius and Clarity Acts. Second, the ongoing institutional stampede, proven by the wild success of Bitcoin ETFs. And third, explosive user growth, driven by the quiet integration of crypto by the world's biggest tech firms. While the timeline is ambitious and nothing is ever guaranteed, the path Hoskinson lays out seems more plausible than ever. The pieces are on the board, but now I have to turn the question over to you. What do you think? Is a $250,000 Bitcoin by 2026 a fantasy, or is it inevitable? Are these new laws the final key to unlocking a massive bull run? Let me know your honest thoughts and your own price target in the comments below. And finally, if you want to stay ahead of the curve on all the market-moving news and analysis like this, make sure you're subscribed to the channel with the notification bell clicked. You won't want to miss what's coming next. Thanks for watching, and I'll see you in the next one.